as the strategically timed launch of the Shanghai Futures Exchange blindsided traders betting against gold, the stealthy BRICS-related initiative to attract more Western priced gold and silver into China, I say silver too, by no coincidence confluences with the anticipated options-related paper gold sell-off. Just looked at it on the charts. Now, the PBOC relaxed Shanghai Gold Exchange rules to allow smaller firms to trade smaller volumes on the SGE physical exchange. Now, I cannot understress how big an initiative this is.
China's strategic efforts to bolster its gold reserves have become a significant driver in the global gold market. The People's Bank of China, PBOC, has implemented measures to acquire undervalued Western gold, positioning the yellow metal as a hedge against potential financial instability and geopolitical risks. Interestingly, this strategy involves modifications to the Shanghai Gold Exchange, allowing smaller firms to participate in gold trading. Market expert Andrew Maguire predicts that these changes could result in a substantial increase in gold prices, potentially exceeding $500 per ounce by the first quarter of 2025. This initiative extends beyond merely acquiring gold. It is part of a broader strategy aimed at recalibrating the global valuation of the precious metal. By involving millions of small and medium-sized enterprises, SMEs, in gold purchases, the PBOC stimulates domestic demand while contributing to China's economic growth, technological innovation, and job creation. Furthermore, the PBOC has relaxed trading rules on the SGE, enabling smaller firms to engage in gold and silver transactions, thereby increasing liquidity in China's physical precious metals market. As a result, while gold prices are expected to rise, silver, in particular, is forecasted to experience a substantial increase, with potential for all-time highs by the first quarter of 2025. This is attributed to the growing demand for physical commodities and the paper market's limited capacity to settle these transactions. Maguire asserts that these actions align with China's long-term objectives of increasing its gold and silver reserves to hedge against the dominance of the US dollar. The accumulation of these reserves is also expected to play a key role in the strategic strengthening of the Chinese yuan as a global reserve currency. Since 2010, China's accumulation of gold has been a cornerstone of its economic strategy, and the ongoing buildup of these precious metals positions the country to leverage these assets in future economic and geopolitical negotiations with the West. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this.
Wrong-footed officials have really once again been snookered by the PBOC. Beijing has just launched a brand new conduit designed to suck in hundreds of tons of Western underpriced bullion to flow into China's industrial base, where it can, with a click of a keystroke, ultimately be weaponized to hedge against a financial or an increasingly likely military war. Now we're seeing potential very large tariffs. We're looking at a very tenuous sort of situation over Taiwan, and a lot of threats. And in fact, we've seen the US really openly preparing for war with China. It cannot be ignored, as well as with Russia. Now, much as the strategically timed launch of the Shanghai Futures Exchange blindsided traders betting against gold, the stealthy BRICS-related initiative to attract more Western priced gold and silver into China, and I say silver too, by no coincidence confluences with the anticipated options-related paper gold sell-off. We just looked at it on the charts. Now, the PBOC relaxed Shanghai Gold Exchange rules to allow smaller firms to trade smaller volumes on the SGE physical exchange. Now, I cannot understress how big an initiative this is. It's completely unfactored into current supply-demand assessments. In fact, liquidity providers expect it's going to force physical prices over $500 per ounce higher By the end of the first quarter of 2025, it's going to force silver to break out into all-time highs. This is not guesswork. It is simply a matter of looking at the supply-demand fundamentals and the inability to settle it in the paper markets. Now, to give an idea of scale, there are 55 million, this is not typos, 55 million small and medium sized enterprises, what they call the SMEs, this is really designed to capture. And they contribute, to give that idea of scale, 50% of all the tax revenue. They produce 60% of all the GDP. They're 70% of technological innovation, and actually a massive 80% of urban employment. Now, these firms, just to give you an idea of scale, on the kind of scale this is. And in fact, the March 2024 published data indicates the number of newly registered enterprises in China reached an average of 23,800 per day. That's not a typo again. This is massive. Now, the scale of this starts to filter in. Now, while the Shanghai Futures Exchange launch was viewed as speculative and everyone was saying, oh, this is just speculative, and it was wrongly interpreted as fickle. And as we've been tracking the PBOC, this is stealthy. This is by design. The PBOC deliberately stands behind each incentivized gold buying initiative, underpinning it long enough for the global physical price to actually catch up and anchor a higher central bank buy point and institutional central bank buy point, thereby strategically bolstering their massive state-held, official, and as yet unpublished monetary reserves.
Legendary expert Andrew Maguire is particularly concerned about the significant developments in the gold market, especially regarding the quiet revaluation process driven by central banks. The strategic moves by China and Russia to establish a gold-backed currency are poised to fundamentally alter global gold reserves and disrupt the broader financial system. Both nations have quietly increased their gold reserves, with China covertly converting many of its foreign exchange holdings into physical gold. As China and Russia expand their reserves, Andrew predicts that this shift could result in gold prices surpassing $3,000 per ounce by 2024. The revaluation process also aligns with the ongoing efforts by BRICS nations to reduce their dependence on the US dollar in international trade. This goal has gained increased momentum in recent years. If China and Russia proceed with their gold-backed currency, it could trigger a worldwide revaluation of central bank gold reserves. This would force central banks across the globe to adjust their holdings, potentially creating significant shifts in financial markets. The adjustment would disrupt the existing paper gold markets, which have historically suppressed the true value of gold and led to higher prices for both gold and silver.
A lot of this week's episode to draw attention to this unfactored BRICS Gold-Backed War Preparation Initiative, which under the radar is preparing the China-Russia alliance to back the as yet unnamed Glaziev's gold-backed commodity currency into an as yet unknown Trump administration. So while everyone thought that, while there was some snookering going on as far as the Enbridge platform was going to go, the BIS-backed Enbridge platform, they haven't sat back. This is the power. The only way you can power an alternate currency is with gold. Along the way, so into the buy stealth, BRICS-driven gold price revaluation process, which is ongoing, each of the synthetic to physical market higher stair steps have been anchored following a series of healthy wash and rinse cycles, flushing out and cleansing the 75% momentum driven, these pillar to post, naked, long and short froth as it comes in and out. And we've just witnessed one. I've just witnessed the last one into the rise and the current pullback from the 2,800 first notice high on the 30th of October through to the 25.41 November lows. So first notice would actually ordinarily be tomorrow, which is Thanksgiving. But clearly that's a holiday. It'll be so illiquid. We actually feel that they're actually now undertaking to cover those positions. Now, what's becoming clearer, though, is that China has, through their secretive shadow banking operations, they've been stealthily converting a large percentage of the hidden over 3 trillion of largely dollar foreign exchange holdings into physical gold. Now, once this is ultimately revealed, the price of gold will far exceed our liquidity provider's 3,000 per ounce 2024 estimate, likely placing this as a floor to rally off. Now, if it is needed to be invoked, nuclear option is for the Sino-Russian alliance to openly revalue their gold reserves, which, to avoid a related interconnected currency breakdown in the other global foreign exchange crosses, would trigger every other global central bank to also have to revalue their central bank gold reserves, a process that could be done really with a click of a mouse. And again, we've done episodes in more detail of how that works. So basically, in summary, the cartel is increasingly constrained into a tighter and tighter physically supported paper range. They dare not uncover really competing, rising central bank delivery obligations they just cannot offset in the paper market. And that's pretty much what we're witnessing now.
The evolving dynamics within the gold and silver markets indicate a significant shift from paper-based markets to a more physical, central bank-backed financial environment. China is pivotal in this transition, positioning itself at the forefront of the precious metals sector by strategically increasing its gold reserves and making key adjustments to its domestic market structure. This shift will likely continue reshaping the global precious metals landscape, with rising demand for physical gold and silver playing a crucial role in revaluation. As global central banks adjust their policies to accommodate these changes, the gold market is entering a new phase, which is expected to be influenced heavily by physical demand and the strategic actions of central banks, particularly China. How do you think China's increasing gold reserves will affect global financial markets and the future value of gold and silver? We'd love to hear your thoughts in the comments below. Make sure to like this video, subscribe to the channel, and turn on notifications for more insightful updates. Thanks for tuning in.